I'm Mark Davis of B&W News, reporting from the Denver Gold Group's annual gold conference in Denver. I'm here with Ferdy Dippenaar, the CEO of Great Basin Gold, an emerging gold producer with one gold mine in South Africa and one in Nevada, both of which have plenty of growth potential in the near-term future. Ferdy, how are you today?
Good afternoon, Mark.
It's a pleasure to meet you. Ferdy, first off, please tell me what would be the key value drivers for your company's share price over the coming months?
Well, in the short term, it's definitely improved performance at our Hollister operations in Nevada. We have seen a steady increase in volumes. That means production from underground. We've upgraded the Esmeralda mill, which of course translates in our ability to pour doré on site. So what we have seen is we've gone from a company which has been significantly dependent on third-party mills, which come at a huge cost, the Midas mill, the Jerry Canyon mill, which means we don't recover our full quantity of gold or metal. We take a haircut, we get a revenue haircut in terms of the gold price. So of course we don't get the right amount of cash coming back to treasury. This of course changes in the fourth quarter with our mill up and running. For the first time we'll be able to report a full quarter, which is what we mine, is what we mill, and of course we recover in terms of gold, and we get full exposure to the actual gold price. So something definitely positive to look forward to from Nevada. And then of course South Africa, we had an extremely interesting phase. Our vertical shaft is basically being completed. Over the weekend the shaft equipment was completed to surface. We changed over to the permanent sheave wheels. We hung the conveyances, which means we start the process of actually licensing the actual shaft with the winders, which have been commissioned. So all in all, we'll have a fully operational shaft on the property. It's 485 meters deep or shallow, if I can put it that way, which means that instead of trucking ore 2.5 kilometers out of a decline full, they'll be trucking it downhill for 500 meters, tipping it in and removing the ore via the vertical shaft. So the whole operation underground changes dramatically in the next month at Burnstone. And then secondly, of course, we've accumulated 158,000 tons of surface stockpile. Low grade, yeah, most of it, but we've also commenced stoping. Our mill starts being commissioned at the end of September. And hopefully our problems are small and we start seeing production, gold production at Burnstone in the fourth quarter, which means we'll see revenue. And I think as an inflection point, the performance or the evaluation of the company, you'll see that I honestly believe a successful commissioning of the Burnstone mill, the vertical shaft, the underground infrastructure, and then the improvements I spoke about at Hollister, that should, in my opinion, drive the stock price of the company in the short term.
And what do you envision your growth out profile to be like in 2011 in terms of gold produced?
Well, put into perspective, we've in the past spoken about contained ounces or ounces extracted because we did not have a mill. But I think if you have a look at the real figures, what was treated through third-party mills, 2008, 2009 was 40,000, 45,000 ounces for the year. This year, Hollister is looking at 110,000 ounces, and depending on the successful commissioning of the South African operations, the mill, it could be 10 to 20,000 ounces. So that's already a 40,000 to 120, 130,000 increase. Next year, of course, it just changes dramatically. We expect to produce at least 160,000 ounces from Burnstone and another 110,000 ounces from Hollister. So it's up from 45 to 120, 130, and then significantly up to 260, 270,000 ounces. That's a decent growth profile in anybody's language, and especially at the current gold price. It's definitely something to look forward to.
So, at what point do you envision your company will become cash flow positive?
Well, early in 2011. Bear in mind, as I said, we accumulated the stockpile. Hollister is already cash flow positive, and with Burnstone having the mill up and running first quarter next year, we can probably claim commercial production by the end of this year if the mill's fully functional, operational. But real cash flows, I would say the first quarter of 2011, and then building up from there. Yeah.
Do you have an adequate treasury to ramp up production at both of your mines?
Yeah, we do. In addition to the cash that we do have on hand, as I said a bit earlier, Hollister actually contributes slightly. Should be contributing more in the fourth quarter. And I think it's 57 million warrants at $1.60 Canadian. Expiry date the 15th of October this year. We have seen a number of shareholders exercise the warrants, so we've received about $16 million Canadian into Treasury over the last week or so, and we're seeing more of these conversions on a daily basis. So come the 15th of October, unless something dramatically goes wrong, we would have in excess of $90 million in Treasury, and the plan is then to start cleaning up our balance sheet, starting to downpay debt. We have taken on debt in the last 2 years to complete the construction of the mines. It's going to be great to start doing that. I think it's something that our shareholders would like to see us do.
And finally, Ferdy, are there any other key points or developments that you feel would be of particular interest to investors?
I think both properties offer growth potential. Our focus right now is not to rush out and just grow the company, but rather just to settle both operations down, getting them operating to their planned capacity. But in the short to medium term, at both the operations, I think there's an opportunity to increase production from underground, probably even more so at Basin, which is the higher volume one, and then exploration. We just keep on finding more and more at the Hollister property. It's a wonderful piece of real estate, because the more we drill, the more we find. And over time, hopefully 2-3 years from now, there's a real possibility in doubling the size of the Hollister operations. Of course, that will be dependent on a few issues, also finding the right milling capacity.
So I should ask you on that basis, what kind of output are you targeting in let's say 5 years' time?
If we dream a little, let's just put it that way, and the current gold price allows us the opportunity to expand operations, I think 300,000 ounces, 320,000 ounces from Basin could be a reality. There's no doubt, compared to the 254 we're planning it at the moment, so that's additional 70,000. And then potentially a 50% increase at Hollister. You know, we can drop the cutoff and mine a lot more, and incrementally have more gold production at an extremely significant reduced cost at Hollister. So let's just say 150,000 versus 320, 470. You know, the magical mark is 500,000 ounces. And who knows? With a bit of luck and hard work, it's normally what it takes. We might just get there.
Great Basin Gold is a rising star in the gold space, and the share price of the company has been performing very well over the last few weeks. So on that basis, Ferdy, I wish you continued success.
Thanks.
Thank you very much indeed.
Appreciate it.